Well, good evening, everyone. On behalf of USP, I'm excited to welcome you to the Money Game, Understanding Financial Aid, tonight's webinar. Welcome to everyone that's joined us. Today, I'm joined by JD Gonzalez from Cameron Downing. He'll be going through various levels of expertise regarding financial aid for students approaching the college decision-making process. And my name is Allison McComb. I also have a higher ed background, having worked across first-year student initiatives for many years at different institutions, and I am now working with USP as admissions advisor, and excited to be here with you tonight. And again, if you are just joining us, we are about to start the Money Game, Understanding Financial Aid. So USP has a very solid history. In fact, USP is celebrating 30 years this year, started by Thomas Anderson, who's on the call with us, our CEO and founder. You can see that established in 1994, again, 30 years in the college placement industry, 2,100 students placed, over 172 million in scholarships and financial aid facilitated through USP's assistance. We have a 98% admission success rate, which is phenomenal, and a less than 1% college transfer rate once students are admitted. We work with all universities, many local and domestic outside of Miami and Florida. Our biggest intent is to make sure that our students have the best fit, the right fit for the college that they're pursuing and their future success. Again, I want to welcome JD Gonzalez, our speaker for this evening. JD is a partner and financial planner at Cameron Downing, a certified college financial consultant, financial planner, and investment advisor. He sits on the executive board of the Financial Planning Association of Miami. He is a professional affiliate for the Florida Institute of Certified Public Accountants. And in interesting news, he was born in Spain and raised in Miami. And again, welcome, JD.
Thank you for the introduction, Allison. It's great to be here.
We're excited to have you, and thank you for your expertise this evening on behalf of our prospective students and families.
Happy to be here.
So JD, we're just going to start with a few questions, and I'll guide us through this. So one of the things that I think need from a basic perspective is what is college financial aid, and what are some of the basics that fall under that heading?
Sure. So financial aid is, of course, education. It is the door to greater possibilities, and financial aid is an element of the process, right? When you're going to go through school, if there's a program or a subsidy or a scholarship or any type of help that can help cover that cost, then that's phenomenal. Sometimes needed, right? We know that college education outpaces inflation at 5% a year, and some of these numbers can be kind of scary. Financial aid is here to help.
Wonderful.
Now, go ahead.
No, I was just going to also ask you to elaborate on what types of financial aid exist.
Sure. So a lot of different types of financial aid. Scholarships are the ones we commonly think of, right? I'm a good student. I've done good in sports. An institution interested in having me might allocate some dollars towards my education or my cost of attendance. Financial aid, need-based financial aid, is based on demonstrable financial need, right? So if there is a gap or a shortfall based on, some allowance for myself to live, financial aid is a calculation that takes place that helps cover some of those costs. Other types of financial aid include work-study programs, grants, and private scholarships as well.
Wonderful. Thank you for confirming that there are multiple types of financial aid accessible to students and families.
Correct.
Yes.
And like I said, the two distinctions there for financial aid, the two drivers, what determines how much aid I'm eligible to get is either need-based or merit-based, right? Need-based, like I said, there's a pretty rigorous calculation that's a byproduct of the FAFSA that most of us are aware of, that determines how much do I need in the form of financial aid to cover those costs. And merit-based is everything that has to do with the student's academics, performance in sports, extracurriculars, volunteer service, etc.
Perfect. So I think sometimes it's hard to understand what financial aid is, much less what is the FAFSA. And my understanding from, again, many years in the higher ed industry is it's sort of the basic tenet of how people can understand what they're eligible for And whether it's need-based or not, the FAFSA is the seminal document and piece that people and families need to submit to make sure that they have that access. So can you tell us about the FAFSA?
Absolutely. The FAFSA is an acronym for the Free Application for Federal Student Aid. Like the name suggests, it's free to fill out, and I encourage everybody, regardless of circumstance, means or otherwise, to submit this form when going through the college education process. It is the gateway for federal financial aid, and more often than not, the gateway to individual university aid as well. Okay, so scholarships that you're awarded, unless they're in the private sector, so maybe a foundation type of scholarship, you know, the ones that you might find on a website or something like that. A school's scholarships are also determined through the FAFSA. Okay, so I've worked with clients before that feel they make way too much on paper to merit any type of need-based aid. Well, sure, but that is the door that opens up the possibility for any type of aid through the university, through the federal government, etc. It's, like I said, used by many colleges for aid distribution, right? It is based on your income, and it's also based on your assets. Again, there's lots of different, more often than not, it's a husband and wife scenario with a child or children that are going to school, but it is based on household incomes. All of those play a factor. All sorts of different incomes play into this. If you're a business owner, those incomes count as well. W-2 salary is absolutely a part of it, but assets too. Assets like the house that you live in, if you own, assets like investment accounts, assets like, and recently there was a change where retirement accounts are excluded out of that calculation, but still required to submit. But the main driver of this calculation is income, is what you can afford on an annual basis to fund these costs. And they're based on the income of both the parent and the student. So if the student is maybe working in grade 12 part-time through a work and an employment program or something like that. Some schools, when I went to school, there was an allowance for that. Could leave school earlier, go to work. That income that I make counts 4 or 5 times as much more as the parent's income. So it does take a look at everybody involved, the student especially. It's the student's investment, but certainly the parent's income as well. And grades do not play a factor into this. Okay, so like I said, financial aid. When we talk about scholarships, so financial aid, again, based on your income, based on your assets, based on your means. The scholarships that a school might offer you as a byproduct of the FAFSA are not based on grades, but still scholarships nonetheless. Okay, and those are, like I said, not based on grades. They're based on what the school is willing to allow for a student. But again, bottom line here, the FAFSA opens the door to all those possibilities.
Yes, and it seems, and I know that the FAFSA is a comprehensive application for students and families sitting down. What types of information should they be prepared or have prepared prior to applying through the FAFSA?
Sure. So the FAFSA, the 2024 FAFSA Simplification Act aimed to solve precisely this. But when I went to school many years ago, filling out the FAFSA was a bit of a manual process, and always, hey, mom, dad, can you help me locate this tax document, or can you help me do this? Nowadays, the Simplification Act has made it so that your social security number, husband, wife, parents, children, that social security number is the key that opens a lot of this information. So the FAFSA application, obviously operated by the federal government, IRS, they've now made it so that all that information flows over. So in the income sense, unless you're collecting income through, maybe you have a rental property or a business that pays out in a different fashion, in those circumstances, those are records that you want to have handy. But for most situations, the social security number will pull in your income information. Now for assets, like I said, investment accounts, real estate, your home, etc., you'll want to have records of that. Sometimes they'll ask you, depending on, and there's an important caveat here, Allison, the free application for federal student aid, or the FAFSA, That's the one that is for public schools, right? Private institutions, locally we have for example, they're going to ask you for the FAFSA, and then they're also going to ask you for the CSS, the scholarships, college scholarship services profile. That, again, will also ask you to fill out, say, have a balance sheet of your assets. So you definitely want to keep track of your assets, balance sheet, etc. And then for financial records related to income, again, that social security number is what brings that over, or sometimes the alien registration number, okay? And obviously, you definitely want to have the list of colleges that you're planning on attending, because the process is this. At the federal level, the student first initiates the application, then indicates who his parents are, and an invitation goes out to the parents to also create an FSA.gov profile. They then input their information. The schools are listed on that. Schools have a specific code. It's easy to find. The FAFSA, you just type in the name of the school and it populates that for you, and you put your 4, 5, 6, however many universities you're planning on applying to. That information then gets sent to the university, and the university is ultimately the one that processes this, and then of course goes first need-based financial aid and then merit-based financial aid.
Thank you for walking through that. That is extremely helpful.
Absolutely. Oh, sorry, Allison. I realized I missed a point on the previous slide. Deadlines. Always want to know what the deadlines are. So for this year, or sorry, for any year, the deadline at the federal level is June 30th. Okay, so we're coming up on that deadline. If you're going to school this fall, absolutely submit that application. Now at the state level, that deadline is May 15th. Okay, now this is the deadline for the FAFSA application itself. Every school that you're applying to has their own internal deadlines. And again, when we're talking about federal dollars that are being allocated based on need, this is a little bit of a first come, first serve process. So if you're applying for financial aid today, before this June 30th deadline coming in a couple of weeks to start school in fall, it's likely that a lot of the dollars have already been allocated. So you want to make sure that you check in first and foremost with the schools that you're applying to and become familiar with their deadlines. And then again, last resort, May 15th for Florida schools, June 30th at the federal level.
Thank you, JD. So with the FAFSA, again, it's comprehensive, but it's helpful to have someone who knows every nook and cranny, basically, of the application. Can you tell us a little bit about how each financial aid office for the college decides, how to distribute their financial aid with the FAFSA as their complement to that decision?
Absolutely. So what was formerly known as the expected family contribution as a byproduct of that 2024 FAFSA Simplification Act is now called the Student Aid Index. Okay, and that calculation is the result of all of the financial information that you've submitted. Okay, so the bottom line of that calculation is the SAI. Okay, that SAI is then baked into every individual university's financial aid office calculation, and that's where the process starts. So that's really the bottom line of the FAFSA application, but at the top of the list for individual university allocation of dollars. You start from there, subtract that from the cost of attendance, then start applying any scholarships, any expected contributions from the family, any gift aid. So again, grants at the university level, not at the federal level, then any loans, and then after that, you have the bottom line, which is your net cost, what you can expect out of pocket to pay for school. Now, of course, the year in school is part of the process. If you're a freshman, if you're a junior, a sophomore, etc., your enrollment status, whether it's part-time or full-time, also baked into the calculation. Again, the assumption is then if you're part-time, maybe you're working a job, right? Maybe there's something else that you're leaving time to do that can help you afford this. The cost of attendance, like I said, is at the top of that list. And it does consider tax and untaxed income, like I said previously, assets as well from both students and parents. And I want to emphasize that student assets, student income is so I mean, we don't need to get into too heavy particulars, but it makes up 40% of the calculation, right? So whereas a parent's income might make half of that. Assets are a much slower threshold, but student money is really the biggest thing that's going to come up in the FAFSA, and what is really going to reduce your possibility for financial aid if the student's making anything after $10,000 is just assumed to be for educational expenses. Now, one of the changes I'm not totally thrilled about, like I said, college costs are through the roof. Previously, before 2024, how many students you had coinciding in school, in college at the same time was a factor. It is no longer, okay? So again, ideally, in a situation where we have the pleasure of working with somebody long-term, we've started to anticipate some of these costs and maybe allocate savings or investments for these future expenses, especially if you have children that are in close proximity in age, and you can expect them to all start. I'm working right now with somebody who has twins, and it's 2 people going to school, but not many allowances for that factor. And also, the 2024 FAFSA Simplification Act, as I'm sure many of you have already heard, has been a very big headache, okay? The federal changes, schools not catching up, the government making mistakes, rolling it out in kind of poorly executed attempts, has made this year's particular FAFSA process very cumbersome. Very, very cumbersome. I'm, again, working with people right now that don't have any decisions yet, and it's hard to anticipate the expense of something when you don't know how much you really have to cover there. But we're hoping that by next year, this is all fixed, this is all resolved, and it's a much smoother process like the one I remembered many years ago, the one I went through. But ideally, starting this year, October 1st is when FAFSA opens, not this year's December 1st, and the process can move along a little bit more seamlessly.
Wonderful. Tell us a little bit more about how to, once they do get their decision, how do they read and compare their financial aid award letters from different institutions?
Absolutely. So I'm going to kind of start at the bottom here, the net cost after aid, okay? There are many online services that will do this for free. You want to find yourself a good net cost calculator that knows how to factor in all these other various types of aids like gift aid, self-help aid, etc. But when you receive an official letter, right, of this is your award, now you have the option to choose whether or not you want to come to my institution, you want to remember to keep the bottom line in mind, okay? How much of their award is loans, right? Sometimes you'll see a big, pretty number at the top, but once you unpack that a little bit, you realize that only a small percentage of it is gift aid, right? And a large chunk of the money that they've said, here's money available for your education, is actually self-help aid, right? Meaning loans that I have to then repay at XYZ interest rates. So understanding the difference between gifts, money that I don't have to pay back, and self-help is very important before you go and say, oh, $100,000 offer, but $90,000 of it is in loans. And again, the net cost calculator will factor in the total cost of attendance, right? So when you work with one of these calculators, you can tell it what school you're going to, what your award letter looks like, plug in these numbers, and some scholarships are applicable for tuition and fees. Some of them are not applicable for room and board. So understanding what expenses are covered by each individual gift aid, right, is definitely important before you go in and accept an offer and then find out later that room and board is coming out of pocket. Again, understanding what projected expenses for books might be, transportation. If in today's modern era you need a laptop, right? Does the university have any available to borrow from the library perhaps, or do I need to buy one for myself because I'm going into computer sciences and it's not an option? If there are additional softwares, programs, some of us have been using Microsoft Excel through a computer that had it for free, and now I have to anticipate that cost. So you really want to understand what the total cost of attendance is, and then factor that into the type of aid that's being offered to you. Okay. And again, key considerations, that net cost after aid, that's your bottom line. That's the number that I am going to have to shell out to get my kid through school. Right now, this is an investment for the sake of your child. This is an investment that's going to open up a lot of doors. And when we work with our investment management clients, we want to understand how much is it costing me today and what's the benefit tomorrow. Your degree is an investment as well. So understanding what your potential earnings could look like is something that you want to consider before taking out a huge amount of loans. Okay. How long do I have to pay back those loans? What is the interest rate on these loans? Does my type of loan allow me to be part of, again, for example, the SAVE plan that was newly rolled out last year? Does this loan fit into an income-based repayment plan? Does it not? And if so, what are my options to do so? What can the FSA.gov website does a really good job of helping you play around with some simulations as far as if I borrow this at XYZ interest rate and I can expect this salary, what might my payment look like? Or if it's simply a standard repayment and I want to say, hey, I don't want to pay as much interest. Well, then understand that once you come out of school or once your child comes out of school, what am I going to realistically earn and how much of that is going to go towards servicing my debts? Again, it is an investment and you really want to understand the cost of that investment and the upside that you have because of the degree.
I remember getting my financial aid letter still many moons ago. And I will tell you, I did not know the distinguishing factor between gift versus self. So thank you so much for confirming that. I think that's really an important point. So once again, we went through a couple of these things, but will you just kind of top line those things that you previously went through? Gift versus self, the types of student loans, maybe some of the terms and conditions, and speak a little bit more to those things.
Absolutely. So high level, gift aid, like the name suggests, it is a gift to you based on factors like need or merit, right? Those do not need to be repaid, and congratulations, because they see something in you or your child where they're happy to have you at their institution. Self-help aid, loans and work-study programs, those do require some type of return to the person who's lending you that money, either an outright loan, student loans, or a work-study program where you work to pay off that debt. Okay. Now the upside is you're also working on getting experience and getting out into the professional world and maybe ideally working in the field you want to ultimately work in. I did a work-study program and it was phenomenal. But again, there is now the sacrifice or the cost of my time to repay that. Okay. Now, loans. We always talk about student loans. I've already said this, it is an investment. And if you need to borrow money to make that investment, then I say absolutely go for it. But like any investment, understand what the costs are, right? So federal loans are direct Staffordshire loans is the program. They are federal loans. These are the ones that were being discussed to be forgiven. These are the ones that have the friendliest repayment plans, the most flexibility, like deference or forbearance. But these are the first loans you want to look at if you are taking on loans. Okay, I would say use up that bucket first. These are the loans, like I said, that might offer grace periods. They might offer, hey, you're in school, it's not until 6 months after your graduation that you need to start paying me back, right? Whether it's subsidized or an unsubsidized loan. The difference there being, sure, I don't have to pay you back until I graduate after 6 months, but in the meantime, interest is accruing, which means that I borrowed today $10,000, but by the time you tell me I have to start paying you back, it's a $12,000 loan. Unsubsidized is that. Subsidized is the government is subsidizing that interest that is in theory accrued. Okay. And again, the benefits, right? So we have the SAVE plan, we have the Repay E plan. income-based and income contingent repayment plans. It's federal loans that allow you to do that. So if you have any qualms or hesitations about what your income might look like on the other side of your education, these programs will give you a little bit more flexibility, and they'll say, okay, well, realistically, based on your current income, then if I bake out a minimum allowance, if I extract then some threshold for discretionary income, and then I apply that to your loan balance, then your payment is this. Also understanding that any type of repayment that is not the standard 10-year repayment means you're going to start accruing more interest. And also depending on what plan or what repayment plan you're on, there could be loan forgiveness, which on paper sounds phenomenal, right? You're just going to wipe out my loan balance. But loan forgiveness, if I've said, hey, you owe me $10,000, but you know what? Don't worry, it's on the house. On paper, you made $10,000 more of income that year. So it's what we call a tax bomb, right? So understanding what that could look like in future years. Again, if you are, say the tax bomb's happening in 15 years, at the same time your income is rising because you're going through the professional world, you're getting a raise here, you're changing a job there. By the time the tax bomb comes around, you could be in a higher tax bracket, and that could be an expensive tax liability that you have to pay that year. And if you don't anticipate it, well, then you're going to have to come out of pocket, and it could hurt if you haven't planned for it properly. Now, private loans. These are by the private market offered to people where the federal loans or, various different circumstances, you just don't have enough in your financial aid offer to cover those costs. And you can always take out a private loan. Now, they'll take into consideration your credit score. They'll have higher interest rates, and they don't allow for income-based or income contingent repayment. So whatever that loan is, think of it like a car loan. I don't care what you make on paper. This is what you owe me, and this is what you have to pay me. Okay. And like I said, they do take into consideration your credit score. So if your credit score is not in the best position, then those terms are even less favorable. Okay. What else? Oh, that's it. I think I've gone through the other two bullets as well, Allison.
Perfect. Thank you. And you'll see in the chat if you're participating, please, if you have any questions, please type them there and we'll address those toward the end of the webinar. So there's more to financial aid than the FAFSA, to the loans, to the grants, to different things. What are some of the things that students and families should be considering when they're either appealing for more financial aid or doing their own budget toward having a savvy financial plan in place for their college years?
Absolutely. So number one, changing financial situations, how to appeal for additional aid and the required documentation. So I worked with somebody, for example, that received a phenomenal bonus coincidentally in the tax year that was relevant for the FAFSA application. We instructed her to challenge that after you receive your offer and say, hey, this is not my typical income, right? This is a one-time fluke that really pushed me up into a higher income, and it's not really the case. Here's my salary. Now, a couple of words of advice here. You are not negotiating, okay? The universities do not like that, okay? You're not negotiating your student loan. The term is you want to ask them to exercise professional judgment. So they're happy to take a second look, but if they start getting the feeling that you are negotiating your aid, that's going to put them off a little bit. How to appeal? How do you actually appeal? Well, once you've received your financial aid offer, you simply contact the financial aid office for that respective university that you really want to attend. And again, sometimes it doesn't have to be a fluke, right? Maybe this is the school that you really want to go, and maybe your parents went there, and maybe you're just a little tight, okay? So you want to make sure that the student is the one executing this appeal, okay? You don't want to be the mom or dad saying, hey, my kid, Jimmy, really wants to go to your school. What can we do? It's not your education. It's the child's education. So the child should be the one reaching out to the financial aid office, either via phone, email, or even scheduling an in-person meeting, okay? Or virtual these days. What else? I'm sorry. Required documentation. So you want to have a number in mind, okay? If there is, like I said earlier, a fluke where one year a bonus came in or something like that, that just really changes your circumstance, you want to have, well, the previous tax years or your current W-2 to justify or to defend the, hey, this isn't my usual income, right? Whatever's pertinent to that, circumstance that maybe affected your finances in that year. Now, you could also apply for financial aid, right, around December or November, and then by the time they're issuing award letters, your mom and dad or your mom lost her job, and now your income has drastically changed. That's an extenuating circumstance. Somebody could have been diagnosed with a really bad disease that's going to throw all these costs to you that were unexpected. So those are some of the reasons for why you might want to appeal. But don't forget, like I said, sometimes it's simply a matter of we're just a little pressed and a little bit more help could make the world of a difference for us. But number one advice, top, most important here, make sure it's the student who's running that show, no one else. It is in their best interest, and the university wants to see that, okay? As far as inaccuracies with your FAFSA application, maybe you typed in an extra zero somewhere and it's simply a matter of correction. Again, there is no formal, in most cases, like correction form. You're just going to want to reach out to the financial aid office and start a conversation about, hey, I realized you based these numbers off of the information I gave you, and I made a small mistake here. Again, if it was my W-2 income is actually this, then make sure you have the documentation to show that that extra zero really was just a typo. Again, any slew of mistakes, you're just going to want to reach out to the financial aid office of the university in question. Now, I'm a financial planner by day, by night, and all around the clock, and any financial planning starts with budgeting. As simple as it may sound, cash flow is the heart of all financial planning. We can talk investments, we can talk financial aid, we can talk taxes, etc., but it all starts with today. What is coming in and what is coming out? If you or your spouse already have the habit of this, great, phenomenal. I commend you for it. Start talking to your children about money habits, creating a budget, tracking expenses, and understanding that, this is going to set the tone that, hey, mom and dad want to help you, but this is ultimately on you. And we want to start showing you the right habits, the right money mindset for not only now, but when you come out of school, how to manage your own personal finances. And of course, say the student's working, well, then mom and dad are going to make an audible and say, hey, of the money that you make, let's set aside this much to help cover some of the unexpected costs or some of the expected costs for education, okay? As far as allocating financial aid funds, it's not uncommon sometimes for a tremendously gifted academic student to receive way more aid than they need. When I went to school, and still to this day, I hear many stories of my child got paid to go to school. What a blessing. Let's not let that windfall of money go to waste. Let's start investing it. Let's start creating a cash flow. Let's start helping them make their first home purchase, whatever that looks like, or maybe even anticipating a future educational year's shortfall in financial aid. Perhaps this is money that you don't realize you might need. So planning for that over the long term is going to help you best allocate any type of overage with financial aid. And as far as the actual, I receive this much money, school costs this much money, if there isn't an overage, that money's not going to hit your checking account. So that money's going to be collected by the school, and any difference is what they're going to ask you for. Now, college debt. Like I said, education, the right education, a lot of degrees out there today that maybe aren't cost a lot of money but don't make a lot of money. I would say that's not the best investment. And if there's a better one, you should certainly look at it. I wanted to be a marine biologist, and my mom and dad talked me out of that. So you want to understand what you're borrowing money for, okay? And you want to borrow only what's necessary. I remember one time I was offered a loan. It's happened before to my clients. They're offered a loan. It's a low interest rate. Hey, maybe we can get real aggressive with this money and make it productive elsewhere. I would shy away from that, okay? Loans on your balance sheet, whether at the parents level or the student level, isn't totally great. And doing something to beat the current interest rate of 6.5, 7, 8% on some of these loans gets tougher and tougher. So I would recommend borrowing only what's needed. But I do think that if you can't quite cover the expenses here, that this is needed as long as you're making the right investment. So make sure that you have that in mind. And of course, outside of the money, the self-help aid that I don't have to pay back, something like a work-study program or even part-time employment options, right? School is, even if you're a full-time student, I don't think you don't have time to find some type of nominal job that can help you in the day-to-day, right? So maybe my job only helps me cover my fun expenses and a little bit of my school expenses, but then that means that mom and dad don't have to, support me as much. So if there are other options other than a loan, I'd absolutely want to explore them.
Wonderful. So now we have some opportunity. And again, if you have any questions, feel free to type them here. But I have a question for you, JD. We heard from you rather about the deadlines that are on the user end. What is the typical window that someone can expect a decision in, barring the fact that right now there is a delay in that decision making?
Sure. So this year aside, in a typical environment, I've seen schools answer as quickly as 30 days. If you are the first one through the door, I remember actually a story from a friend over at USP where someone applied, not even in the best academic position, but they were the first one in all of Miami-Dade County to apply to FIU, and they got their answer real fast. Now, if you wait until beginning of the year, or, I'm going to wait until I have my tax returns, that's the general thinking. So you definitely want to try to beat that to get the best and quickest response. But I've also seen decisions that have taken 3-4 months. The student will get waitlisted, and then sometimes if you've been waitlisted, a particular university might not award you any money, or there might not be any left. So as far as the timeline or the window, it's really hard to say. I think it depends mostly on if it's a really exciting university and they're flooded with applications, which is also, by the way, a statistic that you can look up on each university's page, is typically how many applications they receive and what their percentage of accepted offers are. That's a good indicator. But if it is a school that gets a lot of applications, but you're the first one in, I still think you could get a response pretty quickly. But it could also drag out.
Good. And I think that underscores the urgency of making sure that you're paying attention to deadlines and trying to be one of those students that probably has your FAFSA in the most timely fashion, correct?
Absolutely. Absolutely. If that deadline opens October 1st, I'm talking to mom and dad and getting the family together to make sure all the ducks are in a row by early August, best case.
Okay. And we have another question here, which is more about the Florida prepaid program. We didn't discuss that, but it is a good question. Sure. When is it too late to start a Florida prepaid type of program?
Sure. So prepaid, and I see that next question is also about 529s, right? Mm-hmm. So 529 college saving plans, Florida prepaid, similar but different. So Florida prepaid, what you want to understand here is that you are buying units at today's price for the future cost of education. So it's a great tool, but not a lot of flexibility, in my opinion, right? If your mom, dad starts this in Florida prepaid, then that benefit only works in a Florida school. When is it too late? Well, depending on the timeline of the expected college attendance, that cost, right? Once you factor in, okay, if I need this many units at today's price to cover this much amount of money, that could be a really high monthly payment to you. So always, it's best to start as early as possible. The 529, on the other hand, is a little bit more variable in that what it is, it's an investment account, right? So again, time is always on your side when it comes to investing. The sooner that you can start, the earlier, the absolute best. That said, the 529 is portable, right? So I could start it today, start funding this, and it goes to whatever school across the nation I want it to. Now, in Florida, we don't have income tax, but if you're in a different state where there is an income tax, 529 is also a tremendous tax tool in that the dollars that you put into it are tax deductible at the state level. That said, because of the possibility for, again, the prepaid, you're buying a fixed cost at today's price. The 529 is an investment account. If your investments perform far better than what you ended up needing, maybe you set this up and maybe your kid gets a full ride to school. That's money that can be transferred to another student, another child, or anybody related by blood. It could even be used for graduate school. And even still, some of that money can be used for K through 12 education if there's private schooling. It can be used for trade school if maybe college isn't the route your child decides to go in. And in some cases, it can be used to pay up to $10,000 towards your student loans. And also, recently, because of that Simplification Act, you can actually use it to seed a retirement account, a Roth IRA for the child. Okay, so that's a tremendous way to kickstart your child's retirement accounts. I would, in my professional opinion, always go the 529 route if I have enough time to plan for it.
Okay. Well, thank you so much. And I did not realize the full utility of the 529, so thank you for that. We have another question, which is for a typical middle-class family. There's a lot of discussion around whether, I should encourage my student to get a loan or not. Is it a good idea to help, if they can, a child pay for college versus getting a student loan? What would you say as a financial advisor about this particular question?
This is a great question and quite the conundrum. As a mom and dad, you want to do absolutely everything for your child, but who's taking care of you? Okay, so it's always a fine line between when am I, going above and beyond for my child, okay, and at what point have I helped them in that sweet spot of, look, I've got this much money, okay, I can help you with this portion. I usually tend to tell my clients that, listen, your child is academically gifted. It's got all these options, and they've got way more time than you. If you haven't done any retirement planning, if you haven't started putting money away for yourself, if you've got a big financial need, if you've got a big expense coming up, I prioritize that, not the child's education. The child will always have the option of taking out loans. Okay. So I always try to tell my clients to have these conversations, especially, if junior or senior year of high school, I would like to sit the family down, understanding the full financial picture and encouraging them to talk through, look, we've helped you in life up to here. Okay. And we're going to keep helping you, but also up to here. So maybe mom and dad can afford to pay for one semester. Okay. Or maybe mom and dad can afford to pay for one semester for all 4 years, but then the other 2 semesters you've got to figure out on your own. So yes, what a tremendous blessing it is to be able to pay for all of your child's education, but at what cost? And if that cost is your future safety and financial stability in a retirement situation or with other factors, I want to prioritize that. And if the bottom line is, hey, Jimmy, we can help you with this much and the rest you have to take out on loans, again, if it's a good investment, why not?
No, I appreciate your honesty, and I think it's important that those conversations are had right around the table. So we only have a few more minutes, and what I would offer or ask is, we are going into obviously the summer. What is one thing that if someone's listening on this call or future wise, because we will also be offering this as a recorded piece, what is one thing that students and families could do right now in the summer?
In the summer, give me a little more, Allison.
Well, with June 30th, with June 30th approaching, what is something that you would say either be thinking about, be preparing, or just make sure you meet that deadline?
Sure. I would make sure to meet the deadline. Again, if I'm going to a Florida school, that window has passed. But Allison, I'll be very frank. Like I said, it's kind of first come, first serve. So if you're applying at this stage, I would start planning my personal expenses, finances, etc., with the assumption that I'm going to have to shoulder the entire cost of this and or borrow the full amount. So if I'm applying for aid now for this academic fall year, I'm going to tell you quite honestly, I think your ship has sailed, and I would start assuming a worst case scenario. Now, let's talk next year. What can you start doing? Well, like I said, income is the main driver. If you're a business owner and you have the flexibility to control your income, now's the time to start doing that. Granted, it wouldn't really fall into, because the FAFSA looks at, if I'm applying for 2024 aid, they're going to look at 2022's income return. So income is a lot harder to, I mean, retroactively, there's nothing to do about it, but maybe in year 3 or 4, situation can get better with the proper planning. Assets. This is a new, and again, actually, it's a great continuation of what I've just said about making sure that you've prioritized yourself in retirement. The FAFSA Simplification Act made it so that any income that say you're an employee and your company offers a 401k, I would make it this year's goal to put as much money as I can afford while preserving my household's expenses into that account. Because it's now in a retirement account, and we know that 401ks don't play a huge factor into the asset calculation. So you could, in the same fell swoop, increase your benefit, your retirement situation, and also maximize your financial aid situation. Okay, so the proper income planning, assets, again, you want to make sure you understand the valuation of those assets, how those calculations are ran, and if there's any wiggle room in the price of, say, my primary home, right? Here's an easy one. If I've got a mortgage, then the value of my my asset is not, call it 500,000. I've got a $400,000 mortgage on it. So I get to back that out. And then I get to take it a step further and take a reduced value of that, because, well, if I had to sell this today, God forbid, that's the calculation, but if I had to sell something very quickly, I'm not going to get the full market rate. So understanding, how to calculate those numbers, I'd say, is really important. But planning is the bottom line, right? We have ways here at Cameron Downing to anticipate the future calculation for the student aid index and start planning for those expenses, if any. Start making small changes today that in a year or 2, or in the second half of a college education, if the timing is now, are going to make a tremendous difference on your financial aid. And again, if the bottom line is, then these are my personal costs, then also learning to anticipate those. But if there's anyone here joining us that's maybe, hey, let me see how this works, but my child isn't really quite at that age, start saving, start investing, because you don't know what the future holds and what those costs might be. And if you can put $100 today that turn into $200 in a couple of years, and make it so that your actual bottom line cost was way less, then I would absolutely start looking at those options.
Well, thank you again, JD. And I think the preparation and planning drum can't be beat enough, correct? So we have some information that you've gotten today. If you would like more information, JD has provided his QR code under financial planning support. You can see that code for JD, again, at Cameron Downing. And if beyond financial aid, you'd like information and maybe some support in the college admissions process, from admissions to essay to everything in between, before you get to and make a college decision, USP also has a QR code available. You can schedule an interview with us. And I want to extend a heartfelt and deep felt thank you to JD Gonzalez for his time today. He's gone through a volume of information that, even as someone who is in the higher ed arena, it was a fantastic reminder for me. Certainly something I will take with me. We appreciate everyone who's joined us today and those who will join in the future. Please do utilize these QR codes. And again, JD, thank you so much for your time.
Allison, thank you. It's been an absolute pleasure. And I hope everybody joining us here today has found some value. And again, you fail to plan, you're planning to fail.
Thank you. Have a wonderful day.
Thanks, Allison. Same to you.
Take care.